Hello, Trevor Barone here from Brown & Brown. I've been receiving a lot of questions, specifically from my condo associations, on the financial burden of damages due to Hurricane Irma. Now, I think a lot of associations, although I've tried to harp on this, are not utilizing their individual unit owner policies, also known as an HO6 policy for each one of the unit owners, effectively to pay for the damages that are attributable to the hurricane. And this falls under the loss assessment coverages. So if you have a large amount of damage, whether it is just under the deductible and it's still a significant outlay that you didn't reserve for, or it's not reserved for, or even if it is reserved for, you may want to do a loss assessment to be able to have coverage pulled from the unit owner policy in these HO6 policies, which is what you're looking at here. This is an HO6 policy by Heritage from within our own office. We write master policy, and we also write the individual unit owner policy. And Heritage is probably a name you've heard of. You may even be with them on the master policy side. But I want to run through this so that boards and associations realize they don't have to just use their own financial assets to pay for deductibles, hurricane deductibles, which could be quite large, or costs that are underneath the deductible but could still be very significant, that could really throw off a balance sheet and affect budgets into next year. Instead of having huge increases in budgets, you may be able to use this to receive the money that you need from individual unit owners. So let's dive into this policy. So this is a policy that's about to go into effect for next year, and you're going to see on an individual unit owner policy deck page, that's what this is, a deck page or a declaration page is what we call it. You're going to see dwelling coverage, which is going to be, the building itself, personal property, which is going to be the contents. That's what that 50,000 or 41,800. Loss of use. I receive a lot of questions on this on the master policy. Well, if everybody's out of their home, who's going to pay for individuals to be able to be put up in a hotel? That's what the loss of use is. You're not going to have coverage on your master policy. It's going to fall on the individual, each unit owner in their policy, their HO6. Personal liability, this one's at 300,000, which is what I suggest, and then you can also you can buy an umbrella that's going to possibly bring that up to 1.3 million, 2.3 million, and then medical payments to others. Now, and then the policy fee. And you'll see on here non-hurricane, which is premium. They're just talking about cost, and then hurricane. And this is important because a lot of individuals may think that the master policy is going to cover everything from that's in their unit. So that's not true. That's the first kind of myth we want to break there. And then the other side of that is there are different types of HO6 policies. There's a liability only policy that doesn't cover any of this property. The dwelling, the personal liability, the loss of use, it's only going to cover the personal liability. So you can buy policies that are significantly less that are just liability. And the important thing to know about that is if you just have a liability policy, you're not going to have this loss assessment coverage. You have to have property coverage in your individual unit owner policy. The other side of that is you could have property coverage but not have wind as a covered peril on your property coverage. And once again, you're not going to be able to access the statutory limit of $2,000 if you don't have property coverage. But for example, if we have a 100-unit association and every individual unit owner has this $2,000 in coverage, which I want to pull up right here. So this is page 3 of the declaration page. You'll actually see there's loss assessment coverage right here, $2,000. So this individual elected for the statutory minimum, or that's all Heritage would offer. A lot of carriers are not going to offer this above $2,000. Some may offer $3,000 or $5,000 if you ask for it. If you live beachside, you live on the barrier island, oceanfront, there's not a lot of carriers that are going to offer the ability to increase this amount. But if you can, I strongly suggest that you try, you ask your agent about it. But to go back to the example, you have 100 units, they all have the statutory limit. That's $200,000 that the association can access. And if they have significant damage to their roof, that could be the difference between having huge out-of-pocket costs to the balance sheet, which I don't suggest, or increasing dues significantly, monthly fees. You want to look into the loss assessment coverage, and it's not as complicated as some might think. This is in your policy. You just need to have the covered perils. It may be subject to a deductible. If it's an admitted carrier that's using the new statutory limits, which is $250 is the maximum deductible, then that's $1,750 every unit owner could come up with to pay back the association, which I strongly suggest you do. The letter that would need to go from the association or the association's attorney to the individual unit owners is pretty straightforward. There's not necessarily magical wording that needs to go in there. All it needs to state is the association has suffered damage from, in this case, a hurricane. We are assessing you X amount of dollars, or unit owners in general, a specific amount, $1,500 per unit owner, $3,000 per unit owner. You may be able to access your carriers, your individual unit owner carriers funds, or if you don't have that ability, you'll have to pay it anyway by this specific date. Once you receive that letter from your board, from your attorney, you submit it to your agent or your HO6 carrier directly, and they've been pretty quick to turn these around. That's been our experience. We have, like I said, we handle individual unit owner policies within our office. We have a personal lines department. If you have any questions on that, please feel free to call our main line, 321-757-8686, and ask for Danielle. She's our manager. If you have any questions on the master policy side, that's what I handle. So you can call me. You can call me directly on my cell phone, 321-775-5514. But you please use the funds that are within your unit owner policy. Don't feel like you have to go and assess everybody and there's going to be a huge out of pocket for the individuals because they have this $2,000 if they're insured correctly. And don't destroy your balance sheet by digging in or trying to pull from reserves elsewhere before you access what's available in the unit owner policies. So once again, this is Trevor Barone for Brown & Brown. You have any questions, please give me a call, shoot me an email. You can email me at tbarone@bbbrevard.com.